All right, let's dive into this Indian giant, Larsen Toubro, L&T. You guys wanted to know how they're doing financially, and we're looking at their latest annual report, the integrated annual report for fiscal year 2023-24. It's a big one.
Oh, yeah. Packed with information. They're in so many sectors. It's really a good snapshot of how India's economy is doing overall, especially for things like infrastructure, heavy industry, that sort of thing.
Yeah, so think of this deep dive as like your cheat sheet for understanding L&T. How are they doing financially? What are they planning? And maybe even get a peek into India's economic future.
Ambitious. But I think we can do it. So where do we start?
Well, let's get a big picture view first. The report talks a lot about L&T wanting to add value for their shareholders. How are they trying to do that?
Well, they've got like a three-part plan. They're really leaning into technology to be more productive. They want to make sure projects are done on time and within budget. And they're selling off parts of the company that don't fit their main goals.
Sounds pretty comprehensive. Let's get into the nitty-gritty, the numbers. What's their overall financial picture look like?
The first thing that jumps out is their consolidated profit after tax, PAT. It's up a huge 24.7%, a total of 13,059 crore. That's pretty impressive, especially with how the global economy is doing right now.
Okay, Pete, but what about earnings per share? Break it down for those of us who aren't financial whizzes.
Sure, so earnings per share, EPS, that's the portion of the company's profit that goes to each share of stock. Imagine you own a piece of the company. This is how much profit you'd get. L&T's EPS went up to 93.96 from 74.51. A nice jump, meaning more money for investors.
Good news so far. The report also mentions return on net worth, or RON-NW. What's that all about?
Ah, RNW. That shows you how well a company is using the money invested by shareholders to actually make more money. Like, how efficiently are they using that money? L&T's RNW went up to 14.9% from 12.2%. Shows they're pretty good at using that investor cash.
Definitely good for those who own stock in L&T. Now let's zoom in on revenue growth and profit margins. What's happened there?
Standalone revenue is up a solid 14%, mainly because they've got a ton of new orders, which also went up by 14%. They're winning new business, which means more money coming in down the road.
Speaking of future money, maybe this is a good time to explain order book for anyone who's not familiar.
Right, good point. An order book is like a list of all the work a company has agreed to do that hasn't actually finished yet. So it's a good sign of how much money they'll likely make in the future. And L&T's got a big one.
Sounds promising. Now, those profit margins. Revenue's up, but are they making more money from each sale?
Well, that's where things get a little tricky. The operating margin for the whole business actually went down a little.
Hold on. How's that possible if revenue is up?
There are a couple of reasons. Some projects went over budget, probably because of global supply chain issues, materials costing more, and the types of projects L&T is taking on have shifted a bit. Some of the new ones might have lower profit margins, at least at first.
So not a huge red flag, but something to watch.
Exactly. Later on, we'll look closer at how each part of the business is doing, and that'll give us a better idea about those margins.
Before we get there, let's talk about dividends. Investors love those.
Right, for sure. And L&T came through with a 50% dividend payout ratio, plus a special dividend on top of that.
Now, for the uninitiated, could you explain what a dividend payout ratio is and why it matters?
Sure. The dividend payout ratio tells you what percentage of the company's profit gets given back to the people who own stock as dividends. Higher payout ratio usually means investors are getting a bigger chunk of the profit. L&T at 50%, it shows they want to keep their shareholders happy.
Nice perk for those with L&T stock. All right, let's break down how L&T's different business areas are performing. They're involved in all sorts of things. What's the story there?
The report breaks down the numbers for their main segments: infrastructure projects, energy projects, high-tech manufacturing, and then a category they just call others. Each segment has its own story to tell. Shows us the ups and downs of all the different areas L&T is working in.
Let's start with infrastructure projects, their biggest area. What were the highlights there?
That's the bread and butter for L&T, and it did really well. They landed some big contracts, including a huge 2.8 GW solar PV plant EPC order in the Middle East.
Wait, EPC, what's that stand for again?
Engineering, procurement, and construction. It's how a lot of these big projects are done, especially in construction. L&T is basically handling everything for these projects: the design, getting the materials, and actually building the thing.
Okay, makes sense. Besides that solar plant, what else did they win in infrastructure?
They also got the contract for the Mumbai Trans-Harbour Link project, which is going to be India's longest sea bridge.
Wow, that's massive. Seems like a really complicated project. What does that tell us about what L&T can do?
It shows they're experts in these huge infrastructure projects, especially ones that are really tough from an engineering perspective. They've got their own design teams, they do a lot of training in-house, and they've got a really skilled workforce. It's not just about getting those big projects, it's about having the people and resources to actually do them.
So infrastructure projects doing pretty well overall.
Yeah, I'd say so. Revenue's going up, they've got lots of future work lined up, and they're landing those big, important projects. But, like with any business, there are always challenges.
Let's dig into those challenges in the next part of our deep dive.
Sounds good. I'm ready when you are. So yeah, those challenges with L&T's infrastructure projects, remember we were talking about how the overall profit margin dipped a bit? Well, this segment is playing a role in that.
Okay, so even with big projects and revenue going up, they're not making as much profit as they could be.
Yeah, that's the thing. The report mentions that their precision engineering and systems segment, the one that helped with India's Chandrayaan-3 moon mission, saw a drop in profit margin. Cost overruns, they say.
I'm curious about those cost overruns. Is this just the usual stuff with big projects, or is there something more specific going on?
It's probably a mix of things. Big engineering projects always have some risk, but the global economy makes things even tougher. Supply chain problems, prices of materials going up and down, even finding skilled workers, all of that can affect costs.
So it's not just L&T's own operations, it's also those bigger forces affecting everyone.
Right, and that's why how efficiently they operate becomes even more important. They're investing in all kinds of technology, AI, machine learning, things like building information modeling, all to help with planning projects, using resources better, and ultimately keeping costs under control.
Sounds like they're trying to stay ahead of the curve, using innovation to tackle these problems.
Exactly, but it's not just about the tech. They're also focusing on their workforce, setting up special training centers to make sure they have the skilled people needed for these complex projects.
So investing in both technology and people as part of their efficiency push.
Yep, they get that it takes both to do things really well. And it's not just about being faster or cheaper. It's about keeping quality high and finishing projects on time and within budget.
Let's switch gears for a minute and talk about L&T's debt and liquidity. How healthy are their finances overall?
Well, their total borrowing actually went down to 22,540 crore. That tells me they're actively managing their debt, which is good.
So not too much debt, which means less risk.
Exactly. And their consolidated net worth, while it's a bit lower than last year because of a share buyback program, is still a solid 86,359 crore.
Speaking of that share buyback, you mentioned earlier it could be a sign of confidence. Can you explain that a bit more?
Sure, when a company buys back its own shares, it means they're using their own money to buy those shares from the market. This can show that they think their stock is undervalued, like it's a good deal. It also reduces the number of shares out there, which can boost earnings per share.
So it's a way to give value back to shareholders and maybe even increase the value of the remaining shares.
You got it.
Yeah.
Of course, you always have to look at the context, why they're doing a buyback. But for L&T, it seems like a strategic move, fits with their goal of giving shareholders the most value.
Now let's shift focus to L&T's different business areas. As we said, they're involved in a lot of things, each with its own risks and opportunities. What are some of the key sectors you're watching?
Well, besides their big presence in infrastructure, their energy projects segment is really interesting, especially with the whole world trying to move towards cleaner energy.
Right. Everyone's talking about energy transition and getting
Yeah.
away from fossil fuels. How is L&T handling that shift?
They're pretty active, actually. They've got a special technology task force looking into new things like carbon capture technology, small modular reactors, and how to use biofuels in power generation.
So not just sticking to the old ways, they're looking at how to make their energy business more sustainable.
Absolutely. And they're putting a lot of resources into their green hydrogen and new energy business. That's a booming area globally because of the need to fight climate change and reduce carbon emissions.
What are they actually doing in that space?
Well, for one, they've built a dedicated green hydrogen plant at their big engineering complex in Hazira, Gujarat. They're also using their expertise in electrolysis and renewable energy to become a leader in this new market.
Interesting how they're changing their energy mix to match what's happening globally. What about their other areas like IT and manufacturing?
Their IT services businesses, LTI Mindtree and L&T Technology Services, are doing pretty well. LTI Mindtree is now the sixth largest IT company in India, and LTTS is a top global provider of engineering and technology services.
What are they focused on in the IT world?
LTImetry is all about combining the physical and digital worlds, using things like AI, data analytics, and cloud computing to help businesses transform digitally. LTTS, on the other hand, is deep into engineering and research, coming up with cutting-edge solutions for clients in areas like automotive, aerospace, and industrial products.
So they're covering a lot of ground in IT.
They are, and they're not just providing services, they're helping shape the future of technology by working with giants like AWS, Google Cloud, and Microsoft Azure.
Now, besides IT, L&T is also in heavy engineering and manufacturing, right?
That's right. Their heavy engineering business works on really important stuff, things like defense, aerospace, and nuclear power. They make critical parts for strategic projects like India's space program and defense initiatives.
Wow, they're involved in some really high-tech and strategically important stuff.
Yeah, and they're using their expertise in these areas to be a leader in India's push to be more self-reliant in critical technologies.
Sounds like they're playing a key role in India's technological advancement.
They are. And focusing on innovation and developing new technologies is a big part of their growth and success. But it's not just about technology, it's also about managing risks well.
Okay, let's talk risk. L&T works in all these different areas, and as you said, they're a global company. What are some of the big risks they face, and how are they handling them?
One of the main risks they talk about in the report is currency risk. Because they work in so many international markets, changes in exchange rates can affect how much profit they make.
Makes sense. So how do they reduce that risk?
They use a sophisticated hedging strategy to minimize the effects of currency fluctuations, and they spread their revenue across different currencies so they're not too dependent on any one currency.
Putting all their eggs in one basket, as they say.
Exactly. Another big risk is regulatory compliance. Every country has its own rules, so working in multiple markets means dealing with a lot of legal and regulatory requirements.
How do they make sure they're following all the rules in every market they're in?
They have a whole team of legal and compliance experts who track changes in regulations and make sure they're complying with all the laws. They also train their employees on compliance to build a culture of following the rules across the company.
That's got to be important, especially for a global company like L&T.
It is. And you can tell they take risk management seriously. They have a whole framework for identifying, assessing, and mitigating potential risks in everything they do.
Sounds like a proactive approach to risk management.
Definitely. They know that managing risks well is crucial for lasting success.
We've covered a lot, from how efficiently L&T operates to how they manage debt, their presence in different sectors, and how they handle risk. What's the key takeaway for you so far?
I think the big takeaway is that L&T is financially healthy and has a clear plan for the future. They're doing business in a complicated and challenging world, but they're doing it with a focus on innovation, operational excellence, and careful risk management.
They seem well-positioned to keep growing and succeeding.
I think so. But to really get a handle on their financial health, we need to go deeper into their financial statements. The numbers tell a story, and we need to understand that story.
Okay, let's do it. I'm ready to dive into those statements and see what other insights we can find. All right, we've talked strategy, performance, risk management. Time to get our hands dirty. Dive into the real nitty-gritty, their consolidated financial statements.
Yeah, this is where we see what's really going on. These statements give us a close-up view of their financial health. We can see their assets, liabilities, profitability, how the cash is flowing.
Let's start with the consolidated balance sheet. You said earlier it's like a snapshot of their financial position at a certain moment.
Right, like a financial selfie. On March 31st, 2024, their net worth was a hefty 86,359 crore. A little lower than last year, but remember, that's mainly because of that share buyback program.
Okay, so net worth down a bit, but for a good reason.
Yeah.
What about their debt? Investors always want to know how much debt a company has.
Well, their total borrowing actually went down to 22,540 crore. Looks like they're keeping a tight rein on that debt, which is positive.
Definitely a good sign, means they're not taking on too much risk. What about their capital employed? What does that tell us?
Capital employed is basically all the money they're using to generate profits. Gives us an idea of how big their operations are. L&T's capital employed was 86,956 crore. Pretty substantial. Shows you how big and diverse their business is.
So they're putting a lot of money to work to generate those profits we were talking about.
Exactly. And speaking of profits, let's look at their consolidated statement of profit and loss. That tells us how much profit they made during a specific period, like in this case, the fiscal year 2023-24.
Right. Remind me, what was their profit after tax, that PAT, for the year?
Their PAT was a cool 13,059 crore. A big jump from last year shows they're doing well across their different businesses.
That's a lot of profit. How about their total revenue from operations?
A whopping 171,328 crore. That's a huge number. Shows you just how big L&T really is, all the different things they're doing.
Amazing, the scale of their operations. Let's break that down. We know they're involved in lots of different areas. How did each segment contribute to those profits?
The statements actually show how each segment did. Like we said, infrastructure projects is their biggest one, and it brought in 83,849 crore in revenue for 2023-24.
A big chunk of their total revenue. Shows how important infrastructure is for India's growth. What about energy projects? How they do with all the changes happening in the energy sector?
Energy projects, that's their oil and gas power and green energy businesses, they earned 16,266 crore. It's a changing landscape, but L&T's investments in renewables and new tech are putting them in a good spot for the future.
Good to see them adapting to global trends. Now, what about high-tech manufacturing? We talked about their work in defense and aerospace. How'd they do?
Their high-tech manufacturing, that includes heavy engineering and precision engineering, made 10,072 crore. L&T's focus on innovation and technology, plus their involvement in those key sectors for India's self-reliance, that's all helping them do well.
Sounds like they're riding the wave of India's tech advancement.
They are. And then there's the other segment, things like real estate, construction and mining machinery, financial services, that brought in 8,331 crore. Shows how diverse they are, how they can find growth in different areas.
Okay, so we've got a good picture of their revenue breakdown. Let's talk cash flow. How well are they turning their operations into actual cash?
But the consolidated statement of cash flows tells us that. Their net cash flow from operating activities was a healthy 18,945 crore. Means their main businesses are generating a lot of cash.
Good sign. Means their profits are turning into actual cash they can use. That gives them flexibility.
Right. Then their net cash flow from investing activities was negative 12,969 crore. That's because of investments they made, capital expenditures and acquisitions. Those investments are important for growing and staying competitive.
So they're investing in the future. Good to see. How about their financing activities?
Net cash flow from financing activities was negative 6,508 crore, mainly because of dividend payments and paying back debt. Fits with what they're doing, rewarding shareholders and managing their debt responsibly.
Sounds like they're finding a good balance between investing for growth, keeping shareholders happy, and staying financially healthy.
I think so. Looking at these consolidated financial statements, we've learned a lot about L&T, how they're performing financially, managing their debt, their cash flow, how each segment is doing. It all adds up to a pretty impressive picture.
It's been a fascinating journey, really getting into the details of L&T's financial world. What we found shows a company that's not just doing well financially, but is also smart about how it's planning for the future.
Couldn't agree more. L&T's story really shows the power of innovation, being operationally excellent, and being ready to adapt to a changing world.
So as we wrap up this deep dive, we encourage you, our listener, to keep learning about L&T. Their story isn't over yet. It's going to be interesting to see how they continue to influence India's economy and contribute to the country's growth.
And until next time, keep those great questions coming. We're always here to help you explore and discover new things.